office bearers of the Madras Tax Bar, members of the Madras Tax Bar, friends, ladies and gentlemen, and distinguished guests. It gives me immense pleasure to welcome all of you for the maiden discussion on the budget presented during the course of the week for the ensuing financial year with respect to both direct and indirect practices in particular. The members of the Madras Tax Bar as a fraternity generally specialize in these practice of these laws, and therefore today will not only be a learning experience to the members of the Madras Tax Bar, but to all those present in the audience. It is with great pride that I draw your attention to the fact that all the speakers today on various topics concerning both direct and indirect taxes are full-fledged members and office bearers of the Madras Tax Bar, which is a fledgling association which has already started creating ripples among the lawyers practicing, more particularly in our Honorable High Court and the tribunals located more particularly in Chennai. I'd further like to state that some of our members have been traversing and crisscrossing the country, appearing before the Honorable Supreme Court, various High Courts, raising eyebrows of the Honorable Judges of the respective courts about the knowledge and erudition espoused by the members of the Madras Tax Bar. In fact, the Madras Tax Bar as such is known as one of the best, Madras Bar as such is known as one of the best bars in India. But the Madras Tax Bar is above all that. It gives me immense pleasure to have the privilege to announce that two of our members present, one not, namely Mr. Pramod Kumar Chopra and Mr. Srinath Sridevan, have been designated as senior advocates by the May we now have the privilege of showing our recognition to the newly designated seniors. The Honorable President will do the honors to the senior advocates. As Mr. Pramod Kumar Chopra is not available in our station, his daughter is present here to receive the honors. The President will do the honors. Yes. Mr. Srinath Sridevan, senior advocate.
Thank you.
On behalf of Mr. Pramod Kumar Chopra. Thank you, Mr. President. With these words, the session schedule for today will commence, and as is usually stated at every wedding that takes place, at least in the state of Tamil Nadu, please ensure that all of you have a sumptuous lunch once the session is over. May the session begin. Thank you.
May I now request our Executive Committee member, N. Vishwanathan sir, to introduce the speakers of the budget course for Refunds.
Good morning, everybody. Very happy to see such a crowd wanting to realize their appetite for knowledge. And thankful to the MTB for organizing this program, being the first physical program. We have done so many webinars which are very popular. And I am being asked to formally introduce the two speakers on income tax law in this budget 2023, Mr. M. Swaminathan and Mr. Raghavan Ramabhadran. I personally feel that these gentlemen do not need any introduction at all. They are very, very popular. As a formality, I'll introduce Mr. M. Swaminathan, who is a commerce graduate and went on to get his master's degree in law, MBA, MPhil in law and also a company secretary. He has started his practice in the year 1995 and he's been in the practice for last 27 years. Mr. Swaminathan is a senior standing counsel for the Income Tax Department before the Honorable Madras High Court since 2012 onwards. As far as I know, Mr. Swaminathan is a very gentle, simple person who wants to uphold the law. And I have never seen him not helping anybody, whether it's a junior or any person, in clarifying the law as and when they approach him. Such is his character. Very simple man, and all of you know him also. May I now request Mr. Swaminathan to come and take the dais, please. And one thing I forgot to tell about Swaminathan is, my personal experience with Swaminathan was he was addressing a class on income tax. Normally income tax is not my subject and I attended that class. And he informed such a bulk ad into 3 parts and compared it with the human life, a bachelor life or a married life and a family life, so that people will remember that so much in their life. Such is his way of talking, and I'm sure he will do justice today for the subject that has been given to him. Mr. Swaminathan. As far as Mr. Raghavan Ramabhadran, he is another jewel of the MTB. He is basically a chartered accountant, completed his chartered accountant in the year 2004 and then joined the office of the attorneys Lakshmi Kumaran and Sridhar. Because of his love for law, he studied law and completed the same in the year 2007. He completed law, and then he is one person who does not deal with any specialized law. He is both expertise in direct taxes as well as indirect tax laws. Coupled with his background, he does a lot of commercial law. So he has represented many companies, Navratna to Fortune 500 companies, and he is the recipient of various awards. He was the recipient of the Rising Star of the 40s award. He has been recognized by the Legal Era, a very reputed publication house, and then he is also recognized by the Internet Tax Forum, and recently he has been selected as one of the top 500 advocates by the Legal 500. I have great pleasure in welcoming Raghavan Ramabhadran to the dais for today's function.
Mr. Vishwanathan, apart from the above, he's a great cricketer.
He's a great cricketer, and to say that he is the only person carrying on the tradition which I used to see in the High Court, which is Panjakacham. He's the only person that who comes to the High Court with that, and which we normally see in those days when we are practicing. I only request him to continue that, with the only addition that he puts on a turban also. That would be very good. Thank you very much for the opportunity. The sessions will start. I hand over to the speakers today. Thank you very much.
Good morning to one and all. I first of all thank the Madras Tax Bar Association for giving me an opportunity to speak about the direct taxes proposal which has been made by the Honorable Finance Minister. In fact, we have prepared a PPT. I will be covering mostly around 30 to 35% of the subjects. The balance will be covered by Raghavan Rambhadran. And as per the agenda, the question and answer session will be at the end of the session itself, including after completion of income tax, GST as well as the indirect tax proposals. In fact, this budget was proposed by the finance minister was a balanced budget. There are plenty of amendments. First time I have seen that there are too much of amendments on the income tax rather than on the indirect tax, on the direct tax. So everyone will be eager to find out what is my basic slab rates and other things. So pick to the slides, I will go through the basic here.
Kindly off this light. The light off பண்ணுங்க நடராஜன். Please change all font to black, sir.
These are the agendas which we have prepared. So
Not able to read.
we will just go through the PPT, it will be easier for everyone to understand. Next slide. See, as per section 115 BAC, the new tax regime, the rates under the new tax regime are proposed to be amended with this coming from the effect from the assessment year 24-25. In fact, you have the old regime slab rates as well as you have the new regime slab rates. So up to 2,50,000 rupees, you don't need not to pay a tax, it's nil tax. From 2,50,000, 1 to 5 lakhs, you have to pay a sum of at 5% on the difference between that 2,50,000 rupees. Then from 5 lakhs to 7 lakhs, 50,000 it is 10%. Then 750 to 10 lakhs it is 15%. 10 lakhs to 12 lakh and 50,000 rupees it is 20%. And 12 lakh 50,000, 1 to 15 lakhs it is 25%. And from 15 lakhs it is 30%. This is the old regime which we have. Now in fact the proposal, what the Honorable Finance Minister has stated that I will reduce the slab rates into 5 positions. Up to 3 lakhs it will be nil. From 3 lakh 1 to 6 lakhs it is 5%. You could find the difference that previously it was only up to 5 lakh, now it has been changed to 6 lakhs. So 3 lakh 1 to 6 lakhs it is 5%. 6 lakhs 1 to 9 lakh it is 10%. 9 lakh 1 to 12 lakh it is 15%. 12 lakh 1 to 15 lakhs it is 20%. And above 15 lakhs it is 30%. The Honorable Finance Minister wants that everyone default should come in the new tax regime. The purpose of the intention of the Finance Minister is that if you come to the new tax regime, there will not be any deduction at all. So straight away you will have the tax rate as per the slab rate. That was the present position, that is as of today. If you see that it will be applicable only to individual and HUF. Certain deductions like standard deductions you have in the salary, family pension, additional depreciation, investment allowance, investment rebates, Chapter 6A deductions and other contributions to pension scheme 80JJA are not available. This is the present position. But the Finance Minister has brought one thing with that. She extended that it is applicable to AOP, Association of Person, other than the cooperative societies or body of individual or artificial juridical person. So it has been extended from individual HUF, now it is applicable to AOP, BOA or to artificial juridical person except other than cooperative societies. With reference to deductions specified above continue to be not permissible except standard deductions in the salary and family pension. So even you have this provision applicability of standard deduction and the family pension in the new tax regime, and any contribution to Agnipath scheme, that is 2022, can be additionally claimed as a deduction. The purpose of the finance minister's, to my knowledge, is that she wants to bring the whole to the new tax regime, that is the default tax regime, to scrap all the cumbersome or the difficulties in the income tax provisions. So that is the whole idea of the Honorable Finance Minister.
If I may add just one sentence here, we see that here the proposed amendment is extended to even artificial juridical persons. So, but just to clarify, artificial juridical person here does not include companies. So here it is other than companies, like we have BPs which are also recognized as separate entity, or any entities which are created by an act of law, like many universities, like something like CA Institute, etc., which are not companies but they are judicial persons created by some law. So they are all covered here. These slab rate benefits are extended to them, but these are not extended to companies even though companies are the flat rate of tax.
Thank you, Rama. And in fact, why I stated it is 115 BAC new tax regime, new regime to be made the default regime. So once if you are going to file your income tax returns, you will find that your new tax regime, it will be a default. If you want to opt for old regime, you can do that. Option given to move out of the new regime on or before the due date of filing the return of income for each year. In case of a person having income from business or profession, that is the key word. See, the catchword is that in case of a person having income from business or profession like us, can opt out new regime once, later can opt into the new regime once, no further options. So the clear intention of the Honorable Finance Minister is that please switch over from old regime to new tax regime. Maybe my personal view that they may bring the act to scrap this income tax act with all these provisions, everything, all these cumbersome procedures to be scrapped out and bring a new tax regime which will be a simplified one. Only for that purpose, the Honorable Finance Minister has stated that default regime will be new tax regime. A person not having income from business or profession shall be able to opt in or opt out for each assessment year. So it is only for the business or profession you have to take an option whether to go for the new tax regime or to the old tax regime. Then you have the option only once to switch over. Then after that it is not possible, but it is not like that for any other salaried person or any other. So this is the 115 EAC's new tax regime provisions. Next. See, as it is today as present, if you have an income of 5 lakhs as per section rebate under section 87A, 100% of your taxes totally, that is, which will be around 12,500, will not be taxable. So if you have an income of 5 lakhs, your tax will be around 12,500 rupees if calculation. So the 100% 87A rebate is there. The proposed amendment, what the Honorable Finance Minister has done that, the assessee shall be entitled to a rebate of 100% of the amount of income tax payable on a total income not exceeding 7 lakhs, or the tax amount will be around 25,000 rupees, whichever is less. And the increased rebate will be applicable only when you are in the new tax regime. See, everyone feels that, sir, 7 lakhs, Honorable Finance Minister has informed that therefore we need not to pay. Actually, what she said is, this 7 lakhs, if you want to fit in, come to the new tax regime. But generally the layman would have thought of that, if 7 lakhs, I don't have to pay a tax. That is not, because default tax regime was new tax regime. So the increased rebate is applicable where tax is discharged and very new tax regime. And this is applicable from 1st April 2024. I think 23 is
So that is assessment.
basically for the assessment year is 24-25. That's how we have displayed.
Just this one thing I just want to clarify, wherever we say effective from
Effective
first,
from-
it's always assessment year 25,
24,
that's how income tax works.
For the income tax purposes. Anything starts from 1st April will always have that from that assessment year itself. If it is from any other date which is specified subsequently, it will fall to the 31st March, then the one other new proposal which was brought by the Honorable Finance Minister is that the Commissioner of Income Tax Appeals is totally burdened. Therefore, we bring in a new thing that we will give these to joint commissioners or additional commissioners who will be treated as joint commissioner of appeals or additional commissioner of appeals. So to set up a huge pendency of appeals with commissioner, section 246 to provide appeals before joint commissioner appeals also is being inserted. Definitely there will be a million questions to each and every one. Sir, if the approval is given by the joint commissioner, the question, it will not go to the joint commissioner appeals, it will go to the commissioner of income tax appeals. So any approval which is below the joint commissioners will go to the joint commissioners. And if there is an approval which is as per the act that the approval should be given by the joint commissioner, those appeals will not be taken by the joint commissioner, then the appeal will go to the commissioner of appeals. And one need not to think it that, sir, whether it is joint commissioner appeal, therefore the further appeal lies before the commissioner of income tax appeal. The question is, answer is no. They have just stated that because of the pendency in commissioner of appeals, we have just segregated to find out, to solve certain tax case appeals can be resolved by the joint commissioner itself. So therefore, any appeal against the joint commissioner's order, joint commissioner appeals order will be only before the income tax appellate tribunal and not before the CAT appeals. And this will also be in the faceless. The other procedures, aspects, everything will be given. In fact, the purpose is to solve out the small disputed taxes. That is what to handle certain class of cases involving small amount of disputed demand.
One question that some people are asking is, where do you get this? Because the Honorable Finance Minister in her speech has said that this is to cater to classes of demands where the demand amount is less. But if you see the amendment, it is nowhere it is specified that it is for cases where the amount is less. But the speech is absolutely right because it flows from the jurisdiction of the AC and others to pass adjudication orders. Naturally, if it is going to be adjudicated by a person lower than the JC, then that adjudication itself is based on monetary limits. So automatically only those appeals come on appeal to the JC appeal. So automatically it is inbuilt. We don't need to search for this monetary limit in this amendment. It is already inbuilt when we say that all adjudications by ACs and other things, that other people that will only come to JCAT means these are low stake cases.
Thank you. And CBT may specify the cases where an appeal cannot be filed with reference to the order intimation before the JCAT appeals. I think those procedural aspects will follow in clarifications and other things. Next slide. JC appeals includes additional commissioners also. That I just want to bring it, that there is a specific section 2 class 28CA is being proposed, and this comes with effect from 1st April 2023. This will also be in the faceless regime also. So the procedures and other things will also come the next FAQs and other things. So I just want to specify that appeal from JC appeals will go to ITAT and not to CAT appeals. Clear-cut information which is given by the Honorable Finance Minister. In fact, the Honorable Finance Minister's intention is that they are not bringing out one step of JC appeals. It is just equivalent to the for small disputes, as rightly stated by Raghavan sir. It is only that. Yes. Now, rationalization of ITIT appeals. Existing provision is that 253 provides for appeal before the income tax appellate tribunal. However, certain orders passed by the CIT appeal, principal chief commissioner, chief commissioners, principal commissioner of income tax, director, etc. were not included as appealable orders. Now they are included in the appealable orders. So appeal can be filed against order passed by CIT appeal under section 271 AAP. In fact, simply I can put it in this way that even 263 orders. Sometimes we may not be, the department may not be able to, because against the 263 order, the assessee would have filed an appeal before the income tax appellate tribunal. Now the Honorable Finance Minister has proposed that the department can file cross objections against those orders also. So, against every order before the income tax appellate tribunal, cross objections can be filed before the income tax appellate tribunal. It's a welcome move for all practicing advocates to file cross objections. Definitely they are going to support the CET appeals order, or they may take up any other fresh issues also. So this is also applicable from 1st April 2023. In fact, DRP orders will also have the same. That's the specific intention. They have the problem that whether the DRP orders, whether cross objections can be filed, whether it's been filed by an assessee or by the department. Now cross objections can be filed. So wherever the appeals are pending before by the assessee or by the department before the income tax appellate tribunal, cross objections can be filed. This is comes into the
One doubt I have is, let us say there is an appeal filed before the ITAT against the 263 revision order, and department chooses to file cross objection. Who will file the cross objection against the principal CIT's order under 263? Is there a committee or something which is going to decide on what point the cross objection is going to be filed? Otherwise, an assistant commissioner or joint commissioner officer much below the rank of principal CIT to decide that he is going to oppose the order of the principal CIT under 263. How realistic is it, or will there be a committee to decide this?
The answer is very clear. Whoever is the respondent will file the cross objection.
No, in a 263 order, respondent is only the principal CIT.
Principal CIT.
So principal CIT will give a relief in 263 or give a pass an order in 263.
Right, absolutely. Otherwise, in fact, you can't ask the assessing officer to file a cross objection. So definitely the answer will be the respondent, whoever is that, will have to file the cross objection. So the purpose of the cross objection, they would have felt that what they want to state it in the cross objection, why we have taken that 263, that should be the purpose of the Honorable Finance
No, it
Minister.
cannot be, because it should be on a different point of law. If there is already an appeal filed, on that they can argue. What is not disputed, against that only a cross appeal can be filed.
Absolutely, sir, Viswanathan sir. What has happened is that where we can file cross objection, there was certain specifications. Now to enlarge it, the Honorable Finance Minister has stated that wherever the appeal is filed before the income tax appellate tribunal, whether it is a 263 order or a DRP order or whatever it may be, either by the assessee or the department, cross objections can be filed. That is how
No, if you have not mistaken,
intention.
if I take 2 minutes,
Yes.
what Raghavan is correct, because there is an appeal against the aggrieved party for the portion of the
True,
agreement.
true.
So if the department has to file, the respondent has decided the case, he cannot be a party to cross objection unless there is a party aggrieved.
See, the problem is, the position is that you can't ask the principal chief commissioner to file a cross objection.
But that should
This is
be very
difficult
clear.
to-
There would be a clarification to this extent
Yeah,
also,
yes.
definitely.
Maybe Swaminathan sir, what we can do is we can proceed.
Proceed,
And
yeah.
then these questions will definitely come from the audience. We will keep it for the end.
Yes, yes, sorry,
No.
very sorry.
Please, no sir, please. This 43B, MSME payments, in fact, what is the proposed amendment for 24-25 is that? deduction from any sum payable by the assessee to a MSME beyond the time limit specified in section 15 of MSME Development Act 2006 can be claimed only on actual payment. See, 43B says that whenever I make an actual payment, I can claim it as a deduction. What is the proposal is that there is a cap that time limit specified in section 15 of MSME Development Act 2006. What that section 15 says that section 15 of the MSME Act provides for 45 days if it is written agreement, and if there is no agreement, payment should be made within 15 days. Assuming that in the 1st April I start the payment, whether it is 45 days or 15 days, there will not be any problem. Actual payments will take. But the problem clearly starts from this. If the goods is supplied on 25th March 24 and payment is received on 15th April 24, in which year should be the expenses claimed? If there is a written agreement, it is 45 days. If there is no written agreement, it is 15 days. So, only for that purposes, if you make the actual payment, you can claim under 43PH. Otherwise, it is not possible. That's why they have specifically mentioned that the time limit specified in section 15 of the MSME Development Act 2006. Now, I will put it in the other way also. Goods supplied on 25th March 2024 and payment received on 30th May 2024. In which year should be the expenses estimated? We have to work out that if there is no agreement, 15 days crossed. So you make the actual payment only in the subsequent year. Therefore, you have to claim only in the subsequent year. If you have satisfied both the conditions of 45 days as per the written agreement and 15 days of the without the written agreement, if you satisfy that condition, definitely you can claim in the year in which it is. That is what 43B clause H specifies. See, the key word is section 15 of MSME Development Act 2006. Written agreement, no written agreement. Written agreement 45 days, no written agreement 15 days. Next. Set off and withholding of refund. Assessing officer is having the powers to withhold the refund if there is a demand of the same year. That was the present position. But now the finance minister has extended that. We will not give you the refund. We have the powers. It is not only the same year which is pending, any other assessment or appeal is pending, we have the powers to withhold the refund also. So withholding of refund, AO has limited power to withhold due as per intimation in the assessment of same year is pending. But now, next slide. See, in fact, the power to set up, there is no change. The power to withhold refund is widened. Refund can be withheld if any assessment or reassessment proceedings for any year is pending. And refund could be relating to section 143(1) intimation, appellate order or reassessment order. And one other key thing is that the additional interest of 3% will not be granted for period which refund is withheld. So this is also, they have specifically stated that the additional interest will not be given, that 3% will not be granted, only for the refund which is withheld. So this is the new amendment which has come from 1st April 2023.
One question, Mr. Swaminathan. So this says that refund can be withheld if any assessment or reassessment proceedings are for any other year is pending.
Absolutely.
As against the earlier question where it is for the same year, now it is for
Now
the
it has
other
been
year.
widened whether it is previous year or any other subsequent
Earlier
year.
also it was only for scrutiny assessment, now it is for any reassessment.
Any as a reassessment assessment.
That is clear.
Clear.
So I hope this is not for any appeal pending in any other ASTI's case also. Only for the very same ASTI.
We don't refund for only to that assessee, not to any other assessee. Therefore,
No, the reason I am asking is maybe the same issue may be pending before a higher forum, maybe for a different assessee, may not be for the very same assessee. In that case, this refund cannot be withheld. It may look very, very reasonable to withhold the refund because the issue is pending before a higher forum.
Raghavan sir, the clear word by the finance minister is that withholding of the interest, it depends upon withholding of the refund is only with reference to a particular assessee. It cannot be just because for another assessee I withhold this. That is not the intention of the finance minister.
Yes, no, I think the act has also come out clearly. I just wanted to bring forth this point, that issue may be pending, but only if it is for the very same assessee it can be withheld, otherwise it
Not
cannot
for
be.
any other thing. It can be for the previous year or the subsequent year, that is also possible.
I only request Bhagavan not to speak
Yeah.
so loudly. They heard them louder also.
Exactly, next year be there. That is my worry.
Yes.
You're giving
I was about to say for MSME also that we have already seen it in CSR. CSR was disallowed as an expense first in income tax, and in this budget in GST credit is also denied for the CSR expenses. So therefore GST is, input tax credit is following the steps of income tax. Now under the GST law, 180 days time is given to honor the invoice along with tax for taking the credit. Now if this section under the income tax is extended to GST, for MSME companies alone, it will be brought down to 15 days and 45 days and not 180 days. I would not be loud, but I don't think we are far away from such an amendment in the next budget, or maybe after the election is over, we have to see.
But the
Or
MSME
maybe you did it last time. Did you speak about it earlier for this amendment?
All mistakes cannot be attributed only to me.
But Raghavan, MSME according to me is a beneficial provision for MSME because you show your liability and
So, see, the idea is not to delay the payments for MSME, just to facilitate that. So they may bring it in GST also to deny the input tax credit if I delay it. That is what I am saying. Maybe we can.
It's not for MSME, it is only for small and micro.
micro.
Under the MSME.
Under the act, it says small
Medium is
and
still not
medium scale,
included.
small and micro.
Yeah.
In fact, if you go through the act, it will be specifically.
Section 15 appointed day is there. If you don't pay, then they go to the
Absolutely.
facilitation council.
Absolutely.
And the plus point here is small and micro includes the advocates also.
Yes.
So our clients have to pay within 15 or 40
You
days.
got to register yourself.
Sir, my experience
You are large, but,
is, my experience is they forego the benefits and not pay the advocates.
And wonderful proposal which is given by the Honorable Finance Minister, I just want to specify it is, the present position is that most of the problems which happened is that I offer the income in this year, my TDS is in the subsequent year. How to reconcile it? How to solve these issues? The Honorable Finance Minister has said that, no, these problems can be solved, and specifically they have brought in one provision, if the income is offered in this year, you can file a rectification or any other thing, and the credit can be taken in the year in which the income is offered. This is the simple sum and substance of this one. There was plenty of issues on these. Honorable Finance Minister has settled those issues. No mechanism to avoid TDS, that was the present position. Credit in the following cases, income offered to tax in the ITR in the past year, say on accrual basis. TDS deducted in subsequent year, say in the year of the actual payment. Time limit to file the revised return for the past year has lapsed. Now the proposed amendment with effect from 1/10/2023. So this will be applicable from the assessment year 24-25.
This being a TDS provision.
TDS provision.
So, 1/10/23.
1/10/23 itself is applicable. I said the assessment on an application made by the taxpayer, assessing officer enabled to modify intimation or assessment order for such past year allowed TDS credit. So either the assessment is passed or any other thing. You make an application to the respondent that I have offered this income in this year, the TDS is in the subsequent year. Take credit for that. Definitely the assessing authority has to put. And able to pass the order within 4 years from the financial year in which the TDS is deducted also. So there is a time is also given, which is by rectification. 4 years time limit is there. So definitely it is possible. Consequent interest under section 244A to be granted from the date of application till the date of grant of refund. So you will be getting benefit under 244A interest also. Then credit of such TDS shall not be allowed in any other year. So once you make the application and say that I am offered this income in this year, then the credit to be applicable to that respective assessment. Yes, this is a welcome look. This anomaly was there. In fact, how to solve those issues, the Honorable Finance Minister has brought in this wonderful and settled this issue once for all. Next one. On taxation of electronic gold receipt. In simple, we can say that when if I have the gold in a physical form, converting into an electronic gold receipt, EGR, whether this will amount to transfer as per section 2 and whether I have to pay a capital gains on that. So that was the issue which was going in all their minds, and the proposed amendment says that no capital gains on conversion of physical gold into EGR or vice versa, and physical gold converted to EGR, that is electronic gold receipt, and the EGR sold in exchange, the cost of acquisition is equal to cost of physical gold, period of holding to be continued from the date of purchase of your physical gold. So similar treatment in case of EGR converted to physical gold and sold. So this is vice versa, that this is a very good proposal. Will EGR to be treated as a security and period of holding for security be applied is also a
Because it's in a demat form.
Demat
Period of
form.
holding for securities is 12 months. Otherwise for gold is 36 months.
36 months. But there will be a clarification to this extent definitely, whether because the proposal made by the Honorable Finance Minister is that physical gold equal to EGR. So we have to take that to in mind and bring it. That should be other. You can't treat it as a security. Is my opinion. What the mind of the finance minister. May not be. But otherwise, they need not to say that physical gold is equal to EGR. So the answer would be very simple to this extent. Next. With this, I thank you very much for patient hearing. I just give the floor to Mr. Raghavan Rambatan. Once again, we will meet in the question and answer session. Thank you very much.
Very good afternoon to all the experts and stalwarts on and off the dais. Many thanks for the opportunity extended by Madras Tax Bar, by our Madras Tax Bar. The President was remarking, I thought it's already over. I just wanted to tell him, sir, the Ganga side of the budget is over. The Chandramukhi side is yet to start. We didn't design it in that manner, but it so happened that for Mr. Swaminathan, all the Ganga amendments came to his rescue. Now I have to deal with the Chandramukhi side of the income tax amendments. It's all not hanky-dory throughout the budget. Whatever we have seen so far, very beneficial. Everything is favorable to the RC, fantastic. TDS credit, any year later on you can adjust. They will go and revise the assessment. Fantastic amendments. There is no second opinion on all those. But let us also look at the other side of it. Now, the amendments from here. There is a TCS rate hike, tax collected at source. Just see this. This is the time we have been talking about revenge travel, so many things. The travel sector is very upbeat in our country. They think that they are going to have the golden period is about to start for them. There is a lot of travel. There is a lot of interest in people to do even domestic travel. Forget just the international travel. Everything is happening. All along, the provision, tax collected source, and all of you know that the service provider, this is more like indirect tax. Service provider collects from the service receiver upfront. 100 rupee worth of service, he will collect 105 and give you credit for 5 rupees. That you can adjust against your income tax anytime. Slightly different from TDS. TDS means the person paying the amount deducts. In TCS, it's more like indirect tax. The seller collects the tax also. So for overseas tour package, we are not talking about just flight tickets. No. If you engage a tour operator and you get an overseas tour package, which includes travel, stay, accommodation, everything, food, whatever. So in case of such a contract, Then the overseas tour package, the tour operator earlier was required to collect 5% as tax and he will give you a certificate. Now, this has been increased to 20%. So if you have a foreign tour package for say 2 lakh rupees, now you will have to spend 2,40,000. Yes, it's easy to say that the 40,000 comes back to you as a credit which you can adjust against your tax liabilities. But yes, you have to first shell it out. It's going to a cash flow and possibility of some refund. Assuming, sir, your 245 is not invoked, adjustment against other demands which may or may not exist. So therefore, possibility of refund, no solace. Today I have to spend. As Bhagwati Oil Mill says, it's not a solace. So next, any other remittance, whatever may be the remittance, if it is exceeding 20%, of course I am talking about foreign remittance, not whatever is paid within the country. If there is a foreign remittance, you have the LRS limits, etc. Now forget all those things. If you pay any amount from India to abroad to any person, there again there is a TCS requirement and 20%, no threshold. Earlier at least they said up to 7 lakhs you don't need to collect any TCS. Now you pay 10 rupees, 2 rupees TCS you have to collect. Son sitting abroad, education expense, you transfer, whatever. It's a foreign remittance, 20% tax. You have the ways and means to fund your son or daughter abroad, so better pay tax. So that's what this amendment means. So there is a 20% TCS on all foreign remittance abroad and there is no threshold. What I mean by threshold is there is no de minimis, there is no minimum exemption limit for this. The next slide is relating to the income from other sources under section 56 to 7B. This has been enhanced. So what this is all about is, we know that a lot of private companies are there, they issue shares. Many a time the company receives money, but the money which they receive is much more than what these shares are actually valued at. So there is a fair market value for these shares. The private companies, these are not companies in which public are interested. So private companies, what they do is 100 rupee worth of shares, they collect 500 rupees. That fellow is ready to give this money to the company, so he gives 500. So therefore, 400 rupees is not getting taxed in the hands of the company because it goes as capital. What this amendment has done is, earlier also this provision was there, but wherever it was paid by resident investors, the differential, that is the amount above the fair market value of the shares, whatever is paid, injected into the company by the resident individuals, resident investors, that was treated as income from other sources in the hands of the company. So it is not capital, it is income for the company above the fair market value. Earlier it was only for residents, now it has been extended to non-resident also. So if a non-resident investor subscribes to the shares of a private company and he pays money much more than the fair market value of the shares of the private company, the differential, the premium which he pays will be treated as income in the hands of the company as other sources income and it will be taxed. Remember, this is an other source income, not business income. So therefore, if the business had carry forward losses, this will be income they can set forward, all of those things are not there. So the proposed amendment is effective from assessment year 24-25. The next slide is with respect to the special economic zones. Section 10 capital A, couple of amendments in 10 capital A. So 10 capital A, we all know, provides the 15-year tax benefit. It's an exemption because it is coming under 10, so not a deduction, it's an exemption. To unit established in SEZ, which begins to manufacture produce articles. What happened was, under section 143(1), there was a provision which says that deduction under 10AA is available only if the return is filed in time. So belated return 10AA benefit is not available. This was there in section 143, but a corresponding provision was not there in section 10AA. I think this is just a mistake, so they just corrected it. So now in 10AA also a provision has been brought in saying that you will get a 10AA benefit even only if the return is filed in time. For belated returns, 10AA benefit is not applicable. While that is one part, the other important amendment is 10AA benefit will henceforth be available only if the money is received in convertible foreign exchange. So if the money is not, this was not there. You know, under GST it has always been there, right? Like for export and all, money has to be received in convertible foreign exchange. This condition was not there under 10AA. Now with this budget has been brought in to say that money should be received in convertible foreign exchange and it should be received within 6 months. 6 months from the end of the previous year. That is what is there. And there is also a provision to say it's deemed to be received if the proceeds are received in separate bank account in an account situated which is outside India. Some questions come now with rupee payments being made for international transactions. Now what impact will this have? So we thought it's a great thing. We were all proud that now with some for Russia, etc., with some countries, rupee payment is treated as payments like dollar payments. But now this kind of an amendment which is brought in, which means what will happen if I export to Vietnam or if I export to Russia, etc., I get the money in rupee. Will it mean that 10A benefit is not available? So even though I am proudly able to receive the money in rupee, but because to avail the benefit under 10A, I have to necessarily receive it in convertible foreign exchange. This kind of situation now emerges. Of course, the amendment is effective from 24-25. So that is what it is about. So this is the next amendment. It's a very interesting amendment. There are some vices these days. Earlier only lottery, horse race, those were treated as vice. But now it is not like that. You buy a Bitcoin, you are a bad boy. You play, what is that, cricket, Dream 11. Some on, it may be cricket only, you may be, all your statistics knowledge on Sachin Tendulkar or Virat Kohli, everything you will be applying, you will say that in this kind of pitch, this kind of bowler, you see this player will play well, etc. You say all these things, very good, you win there, but pay 30% flat tax here. And there is a TDS also. And there is prosecution also if you don't pay. So therefore now, the online gaming. Yes, sir.
Slide is different.
I'm coming to that, sir. So online gaming market is treated akin to crypto. So what they have done is, similar to this, they have made few other changes. In online gaming, etc., they have said that TDS obligation is where you ensure the tax is deducted. So I was coming to that. A question arose, suppose I am required to deduct tax, but there I don't pay in money. What will happen? So the law says you have to ensure that the other person pays tax. This kind of a problem was brought in. So therefore now we are talking about two things. Wherever I pay in money, wherever I don't pay in money. Now I come to benefit of purpose. Money, non-money. Whenever I pay a benefit to another person in money, I have to deduct tax because I am paying, so I can hold some amount and then pay the balance. Whenever I am not paying in money, I am giving in kind. How do I deduct tax? You cannot expect me to pay out of my pocket. See, what is TDS? I pay you 100 rupees, I pay 90 rupees to you, 10 rupees I pay to the government. But when I don't give you 100 rupees, I give you a Mercedes car as a benefit. Then you want me to pay 10%. What will I pay? So should I pay out of my pocket? So therefore, there was a provision brought in the earlier budget that in these kind of cases, including gaming, that is where I was coming from, including gaming, that wherever anything is paid out in kind, you have to pay TDS, but if you are not paying TDS, you at least ensure that the person, the beneficiary, is paying the tax. So when I give out the benefit to you in kind, I cannot deduct TDS because I am not making you any cash payment, but the responsibility is on me to ensure that for that benefit, you determine the monetary value and you deposit the tax with the government. This is what the provision said in the last budget. Again, there was one problem. What about section 28? So TDS is on the other side. What about the person earning it? So now, if you see the present position, 28(4) taxes the value of any benefit or perquisite, whether convertible into money or not, arising from business or profession under the head profits and means of business. The question arose under 28(4). 28(4) is the taxable event, the taxability provision for business or profession, in the hands of the person who is earning the benefit, earning the income. This provision said whether convertible into money or not. So suppose I pay you money itself as benefit. Can you ever apply the test of convertible into money or not? Therefore, the court in Mahindra and Mahindra held that because of the usage of the phrase convertible into money or not, it will only apply to non-monetary benefits. If it is money benefit itself, the question of convertible into money or not will not arise. The fact that it talks about convertibility means the benefit is only non-monetary benefit. Therefore, wherever the benefit is actual cash which is paid, section 28(4) is not applicable. This was held in Mahindra and Mahindra Supreme Court. Mahindra and Mahindra was a case relating to waiver of a loan. Loan was given, loan was waived. Loan was waived, court said that there is nothing but money only. Waiver of loan, it is not any non-monetary benefit. Therefore, 28(4) itself will not be applicable to such a situation. This is what court held. Now, this is what 22 is 194R, which I have already discussed, which also had the similar provision, convertible into money or not. Now, the amendment which is proposed is 28(4) is amended to take care of Mahindra and Mahindra. What it says is, whenever we say convertible into money or not, it will include partly in money, fully in money, partly in kind, fully in kind, everything is convertible into money or not. We are clarifying this to you because you may have some doubts. So I am clarifying this to you. Now henceforth, on 28(4), when we say convertible into money or not, it will include cash benefits also. Therefore, it is liable to tax. And again, similar amendment is made in section 194 also, which says that TDS is applicable on monetary benefits as well. So henceforth, it is clear, monetary benefits, it is there because of this amendment. Non-monetary benefits also, you have to ensure that the other person has paid tax. Both requirements are there. Now, going to the next slide. 271C, 276B. 271C is for penalty, 276B is for prosecution. I just said under 194R, etc., 194S also, it all talks about ensuring that the other person has paid tax. TDS liability is on you, you are not paying in cash, you ensure other person has paid tax. If I don't ensure, what will happen? Will you saddle me with a penalty because I didn't ensure other person has not paid tax? Am I an agent for you to collect tax? What will happen? So far, though 194R provision was brought in the earlier budgets, there was no penalty provision for this. There was no prosecution provision for this. Now it has been brought saying that 271C and 276B, that is penalty and prosecution, will apply even to a person who fails to ensure that the other person has not paid tax. So all along income tax was there when you failed to pay tax. Now income tax is there if you don't ensure other people pay tax. And you can be prosecuted also, maybe other person will go scot free. But you will be caught.
All of us are IT officers.
Yes, sir. All of us are IT officers and honest IT officers.
Again, sir,
And we don't get paid for
purpose of this issue is that whether the TDS is being taken in a proper manner. Only the finance minister's intention was that the TDS, there were plenty of lacuna in that one. So whether a proper tax deduction has been taken place or not, the one and one year question.
Sir, well noted, sir. Well noted, sir.
Mr.
You can use it in the court.
Mr. Swaminathan only helped draft all this.
Sir, Ganga can sit quiet. If you have a Chandramukhi set, please talk. So, these amendments are made in 194S, 194R, 194BA, etc. We will see what all those are. So, going to the next slide. Now, this is another very famous case, whether you know income tax or not, everyone will know what BC Srinivas Chetty is. BC Srinivas Chetty means there is a levy provision, there is no missionary provision for calculating the tax or collection, levy provision itself fails. This much everyone knows, everyone uses it. The issue in BC Srinivas Chetty was goodwill which was generated. Goodwill was treated as a capital asset under the income tax act for the purpose of capital gains. But for capital gains, the amount is, what is the sale consideration? Deduct the cost of improvement or cost of acquisition, the balance is the gain, naturally. But if it is a self-generated goodwill, you didn't acquire the goodwill from someone, you are doing business, goodwill got generated on its own. How will you determine the cost of acquisition? There is no manner or method in which you determine the cost of the goodwill. There the court said, law is not providing for the determination of cost, therefore there is no capital gains on goodwill, wherever it is self-generated. This is what the court said. Amendments were brought in. okay, now because of Srinivas, now goodwill, trademark, right to manufacture, for all these things, we will deem that cost of acquisition is nil. So entire sale consideration is liable to tax. This is the present position. So far so good. I mean, it could have been better, but as of now it is what is there. So in case of self-generated is not a term used in the law. We are using it for convenience. Wherever it is not acquired from a person who had acquired, then it is self-generated. That's what we call. Now what happens is,
28 or 38 will apply for this accounting standard.
yes, of intangibles for valuation and accounting. Next. Now the proposed amendment is, earlier it only said trademark, this thing and all. Now they say for all, any other intangible asset also, not just what is mentioned. If there are any other intangible asset, if you can comprehend, for all those things also, we will deem that cost of acquisition is nil, which means your entire sale consideration will be liable to tax. What will be the impact? Impact is, I'm just thinking, suppose I'm an architect, I'm developing a lot of designs for homes. Architect job is to do the activity. But I'm also developing the designs, I'm generating myself, so I employ 10 designers, I come up. So I spend so much and I have designs and get it registered also under the Design Act, etc. It is an intangible, there is no doubt about that, it's an incorporeal asset. Now, when I sell those designs, the entire sale consideration will be subjected to capital gain. It is not business income because I mean some other thing, this is only generated as an asset in my business. I am not dealing with designs. So, when you compute the capital gains, the entire sale consideration will be subjected to tax. Sir, I have employed so many people, they have also, I am paying salary to them, they were there making these designs. Is it not deductible? No sir, it is not deductible because cost of acquisition or cost of improvement is now deemed to be nil. Therefore, entire sale consideration will be liable to tax. That's the impact of it. Next. This is a very important amendment which happened in this self-generated goodwill and other things. Sale consideration, sorry, cost of acquisition is deemed to be nil, is going to have a big impact. Now this tax treaty relief, this for a very minor sector, it's not applicable for everyone. These cases where there is an income by way of mutual fund, in respect of a mutual fund, when it is there, this is an interesting issue but not an issue which cuts across industries. What is the rate of TDS? That is the question. The thing is, the section itself gives a rate of TDS. We all know that there are two types of TDS rates. One is the section itself gives this much is the rate. Other is like 195 which says TDS will be at the rates in force. So when it is rates in force, there are judgments which say that rates in force means okay, then you can go to the DTA rate will also apply. So domestic law rate or DTA rate, whichever is beneficial we can take. But if the TDS provision itself gives a specific rate, it is not saying rate in force, Pilcon judgment of Supreme Court says, no, you cannot take the DTA rate. You cannot go for the beneficial rate. Specific rate is mentioned, only that rate will apply. This is what Pilcon says. Now, this has been clarified. So, when paid to non-resident, DTA rate can also be applied. Even if the section has a specific rate, DTA rate or whichever is beneficial can be applied. This is not for all sections. For 196A, this amendment has been brought in.
I think this is Gangavani, not Chandrapur.
Sir, by mistake. So, I will take only 10 more minutes. Maybe we can then stop for the thing because this is again one important topic. I think this is the amendment of this budget, which I have already alluded to, but Mr. Swaminathan told me that I am talking on a different subject. So, I will go back to that subject. Online gaming. Online gaming today, from all angles, will be taxed. That's what it means. I hope all of you know, I mean, you may be experts, how it happens. Most of the online gaming apps will have a wallet and I put money in that. Using the wallet, I bet in certain matches or games, etc. And I get a winning. And that winning is also given back in my wallet. We are not talking about the money I pay for entry, the admission. We are not talking about that at all. In this whole section, we are going to talk only about the winnings from online games. How the winnings from online games is going to be treated in future. So, A brief snapshot of it is IT provisions relating to winning from online game covered under two heads. One is the user taxation, the person who gets it, he is taxed. Other is the TDS obligation, which is applicable on the gaming operators. User taxation, these sections are there. And with the user, these will be taxed as income from other sources. Pardon me for IFOS, that means income from other sources. No deduction will be allowed towards expenditure allowance. So for example, I am paying so much to join. So whatever expenses I have incurred to join, etc., that amount will not be given to you as deduction at all. There is no provision, it will not be given. 58.4, we all know 58 itself deals with what all will not be allowed to be deducted when calculating income from other sources. This is also put there. Then there is a flat rate of 30%. We talk about new regime, old regime, those are all for non-gamers. For gamers and people in crypto, bitcoins, etc., flat rate of 30%. Forget everything. That money is out of the slab rates. Now, TDS provision is payer, the person who pays, is liable to deduct TDS on income by way of winnings from any game exceeding 10,000 rupees. Please remember, whatever I said so far are all as on date, whatever is existing, these are already there. Now, what will happen is, there are already some issues in the existing regime. There is no deduction in relation to income from this, tax rate is 30%. Then how do you calculate the income? In one game I win, one game I lose, can I set off? Is it the net winnings which is liable to tax? These questions come. What do you mean by game? Here also game means, will it cover only game of chance? Will it also cover game of skill? So all those things come. Then threshold 10,000, will it be for each game, or threshold 10,000 will apply for the entire financial year? How do you apply? Loss from one game, whether it can be set off. TDS means what? At the time of when TDS is applicable, when the money hits the wallet or when I withdraw from the wallet. These questions remain even as on date. Now, going forward, the proposed amendments, then we can look into what all other confusions also arise. Now, we will go to the proposed amendments. Now, a separate provision called 115 BBJ has been introduced for online gaming. Now, this is separate. This, you can say it is carved out from your 115 BB. 115 BB already covers horse racing, lottery, card game, any other game, everything is there. So as on date, 115 BB will apply. Now going forward, after this amendment has come, online gaming alone will be carved out and it will sit in 115 BBJ. So today under 115 BB, after the Finance Act comes into force, it will be under BBJ. Now in BBJ, the tax is on net winnings from online games during a financial year. And net winning, how it will be calculated, it will be prescribed by way of rules. Tax rate is 30%, online games is defined, everything is covered. Over internet, whatever you play, it is online game as on date. So then comes into effect from 24-25. It shall not apply to online games from, so therefore this is what I was saying, carving out from 115 BB. 115 BB will apply till assessment year 23-24. From assessment year 24-25, it will be 115 BBJ. Next. Now what does the TDS provision say? TDS says, TDS is on net winnings from online games in user account at the end of financial year. So computation of net winnings, how to compute, they will prescribe. Event of deduction of taxes, withdrawal or end of the financial year, whichever is. So therefore, you have a wallet, you win money, money comes and sits in the wallet, that time it is not liable to tax. Wallet is with that person. So money comes and sits in the wallet, that time it is not liable to tax. When you encash it, when you withdraw from the wallet and send it to your bank account, that's the time it is treated as income. But it doesn't stop here. However, on 31st March, if there is any money remaining in the wallet, then even if you don't withdraw, that will be treated as income of that year, and whatever is there in the wallet also will be taxed. So during the year, whatever you withdraw is income. End of the year, what is lying there in the wallet itself is income. It is deemed to be income, it will be taxed, whether you withdraw or not. So TDS at the time of withdrawal on net winnings comparison TDS on amount remaining overnight at the end of financial year. So TDS will be deducted on the amount lying in the wallet. So suddenly on 1st April your wallet amount will come down. They would have deducted TDS. User account and online gaming intermediary are defined. User account of a user registered with online gaming intermediary. So winnings in kind, suppose if they offer winning in kind, what will happen? We are talking about TDS. This fellow is not paying money into your wallet, he is giving the winnings in kind. Then the onus is on that person, like as I said, to ensure that the winner has paid tax for this winnings. And if the person has not paid tax, the gaming intermediary will be prosecuted and the penalty will be levied under 271C etc. and 276B also. So therefore, his job wherever it is non-monetary winning, I have to, suppose I am the winner, I have to pay tax. Not only that, the gaming intermediary has to ensure that I have paid tax. Otherwise, there will be penalties also which will visit him. So TDS is applicable from 1st July 2023. Now we are getting into 194B, which is existing. This 10,000, this is existing. 10,000 threshold, whether it is to be seen a financial year and not a game. So it should be seen, it is clarified, it should be seen a financial year. So it is not like for every game winning only about 10,000 is taxed. No. For a financial year, if your total winning is about 10,000, entire amount is taxable, not the amount above 10,000. Entire amount is taxable. So 10,000 is the de minimis rule. If it is below 10,000, don't worry. But in a financial year, if you have won for more than 10,000, entire amount is taxable. This is applicable from 1st April 23, which means 23-24. Then 194B is inapplicable with effect from 1st July 2023 in case of TDS on winnings from online game. This again, I am only reiterating. It is already there because there is a separate provision for online game which has come into force. The penalty provision we have already seen. Failure to ensure will visit penalty on the gaming intermediary, and 276B also. That is also there on the gaming intermediary if it does not ensure that tax is ultimately paid. There are a few key issues. I'll just show the screen. There are so many issues. Maybe we can discuss whatever is relevant at the time of Q&A. I'll just run the slides for you. What is net winnings? So net winnings, please remember the phrase is very, very deceptive. Net winnings is not total winning minus expenses. It is not. That is clear. Net winnings means winning minus losses, whatever is there, that is what is net winnings, not the expenses which you have incurred for this thing. Sir, for gaming only I set up a system, I set up a person. All these expenses are not to be deducted. That we have seen already in 58. Can set off of loss from one game be claimed against winnings from other games? So can you adjust? Impact of definition of net winnings on prior periods. So for prior periods also, for 115BB also will this be applied? 58.4, no deduction will be available for income from online gaming. Net winnings, manner to be prescribed. Can, I will only say net winnings is taxable. What is net winnings and all? I will delegate. Is it excessive delegation? Can they decide everything? So, how to compute winning? So many questions are there. The third bullet I will answer. Yes, I think there is one slide before this. Yes. A few questions on that. Like this is what the third bullet you can see. Winnings from game 1 is 5,000. Game 2 is 9,000 in a financial year. TDS is on 4,000 or 9,000 or 14,000. So 5,000 is there. Then 9,000, total is 14,000. TDS is on which amount? Answer is, it is not 14,000 minus 10,000, 4,000. 10,000 threshold is not like over and above only TDS applicable. So the answer here is on the entire 14,000. Once it crossed 10,000, on the entire 14,000, TDS is there. So winnings from game 1 is 5,000, game 2 is a loss of 3,000, game 3 is 9,000, let us say. So 5 minus 3, 2 plus 9. So 11. Whether TDS is on 1,000, because 11,000, 10,000 is threshold. Is it on 1,000? No. Is it on 11,000? Yes. Is it on 14,000? No. You cannot treat loss as profit. You cannot add that up. It has to be deducted. That's how we understand net winnings. So therefore, it has to be on 11,000. So on the first year, in the wallet, there is a balance. What are we going to do? So on the first year itself, will it be applied, those TDS provisions, all those questions arise. Cashback bonus, promotion, what is called winnings? What if if there is a dual wallet system allowed? So for each wallet, I have to see separately, or I have to combine both the wallets for the same user in the same game app. Next. So these are winnings from April to June 23 because it is effective from July 23. So less than 10,000, it is withdrawn. So I'm skipping these questions. There are so many questions. What if in kind? So confusion galore. You will get all these answers during the question answer session. We have no problem. Common answer is there. We will get the answers. Author of all these amendments. With this, there is an important amendment in charitable institution. I'm sorry, it just slipped my mind. In short, what it means is, we all know that charitable institution has to apply 85% of its income for charitable purpose. The questions that arise is, suppose I use it out of corpus, or I get loan, or I borrow amount, and I apply it, then what will happen? So the amendments say that subsequently, whenever you have received the income, you can apply it to the corpus. So basically you recoup the corpus, then it's fine. Now there are few more conditions that the deposit back should happen within 5 years. If it is more than 5 years, then even if you earn income and put it on the corpus, the benefit will be gone. So there is a time limit which is prescribed now. And it also says that where you have spent out of corpus before 31st March 21, now this 5 years is also not applicable to you. Before 31st March 21, if you have spent out of the corpus, even if you deposit back from your income today, then also it will not be treated as you have applied the income for the proper purpose for that year. So this is a crucial amendment. So all expenses made out of corpus which you have treated as application of income for the period prior to 21, there is a problem. So necessary amendments have been brought in 1023C and section 11.
Round tripping also. Round tripping, 80.
Round tripping also, that is what this is. So suppose if I make from one trust to the another trust, then also the same.
85% is only allowed.
This is what is. Amendment brought in to propose that only 85% of the donation made to other trusts will be construed as application, not the entire 100%. Earlier, if these two trusts were having similar objectives, then I move from here to there, it was treated as application. But now it is restricted only to 85%. That is what this amendment is all about. With this, though we slightly delayed it beyond the allotted time, we end this session on income tax. I thank Mr. Swaminathan and our team who worked on the slides and all of you for listening to us very patiently.
We will discuss about the 54, 54F, other amendments and all those things. We will have that discussion because of first year. We will have the other amendments.
Thank you, Swaminathan sir and Radha Damodaran sir for the elaborate and informative session. We'll have a short break for 15 minutes. We request one and all to join us for refreshments.